There are a lot of great stocks that are out there, but did you know that through the first half of 2024, less than a quarter of the S&P 500 actually outperformed the index? And in today's video, I'm going to uncover one stock that I am most bullish on for the rest of 2024 and beyond. In fact, I've been building my position, this very position, into one of the largest within my portfolio over the past year and even more recently. But before we unveil which stock that is, do me a huge favor. Click that like button down below, subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, taking a look at the one stock I am most bullish on for the remainder of 2024, but not just that, I'm looking long-term as well. And when it comes to investing in companies, I love companies that have multiple income streams, because when one income stream maybe is slowing, other income streams can build it up, a diversified company. And this very company that we're going to be taking a look at today has just that, multiple income streams that are massive, that are growing. They have income streams related to cloud, related to chips, advertising, retail, and the list goes on. With those clues right there, many of you may have already guessed which stock we're going to be talking about today and taking a closer look at. And that very stock is going to be Amazon, stock ticker AMZN. Amazon was created back in 1994 as an online bookstore run out of a garage and was founded by Jeff Bezos, who's one of the world's richest people today. However, Amazon has evolved to much more than that. They still have the online retail marketplace, which doesn't just sell books these days, but they've also got into advertising. They've also are a massive player in cloud computing, and they even, in fact, build their own chips. There is so much to like about this company, and it has huge upside. Although the chips are not AI related yet, the semiconductor chip market is expected to surpass $1 trillion by 2033. Many of the mega cap companies have been investing towards developing their own chips. In terms of cloud, AWS makes up more than 15% of the company's revenue, and it dominates along with Microsoft as the two companies that make up more than 50% of the entire cloud market. In terms of cloud growth, the sector is expected to grow to roughly $1.3 trillion in the next few years. Advertising is an area of the business for Amazon specifically, which has been growing quite quickly. And it's one that I don't think a lot of investors are paying that much attention to or giving the company enough credit for. Looking at this chart here, you can see the digital advertising revenue market share breakdown with Alphabet with their Google platform on top, followed by Meta Platforms. No surprises there at the top, but look who is the third largest US company in terms of digital advertising revenues. That is Amazon. Back in 2021, just 2.5 years ago, Amazon accounted for only 10.7% of the digital advertising revenues, but that is expected to nearly double to 17.3% by the year 2026. In Q1 2024, Amazon reported quarterly ad revenues of nearly $12 billion, which was a 24% increase over the same period last year. Advertising still accounts for less than 10% of total revenues for the company as a whole, but it's something that's growing fast and the company is expecting to lean on in terms of growth moving forward. Now let's take a closer look at some of that growth the company has been seeing over the past few years. Now that they are led by CEO Andy Jassy, who was appointed by Jeff Bezos back in the fourth quarter of 2020. What a time to get named to the top spot. But Jassy has performed extremely well, and this business is firing on all cylinders. Taking a look here in Q1, the company saw their profits triple. Yes, that is correct. They tripled their profits, with revenues growing 24% to $143.3 billion. A company of this size tripling their net profits is no easy task. Looking here, you can see how revenues have grown over the past decade, constantly climbing. No negative revenue growth quarters. Revenues are great and all, but as an investor, I care more about free cash flow. Free cash flow is what makes the business grow. Looking here, you can see something I'm extremely excited about as an investor in Amazon, and that's their free cash flow growth. Back in 2021, the company had negative free cash flow of $14.7 billion. In 2022, they had negative $17 billion. But fast forward to last year, 2023, they flipped the script into positive territory by generating $32.2 billion. And over the trailing 12 months, that continues to climb higher to now generating $45.7 billion in free cash flow. Free cash flow is growing, so that may have some thinking that, oh, well, their capital expenditures are probably being reduced by a large amount. And no, that's actually not the case. This company is still spending close to $50 billion in capital expenditures, reinvesting back into the future growth of the company. And as this progresses moving forward and that free cash flow continues to grow, then maybe we'll even see a dividend. So now that we know a little bit more about the business and some of its recent results and things I'm excited about as an investor, let's take a look and see, is the stock still a good value? Because as I often preach, you got to be able to separate a company from a stock price. And we're going to do that right now. The company currently has a market cap of $2 trillion, and shares have increased nearly 50% over the past 12 months, and shares are up 28% year to date in 2024, and they've nearly doubled over the past 5 years. In terms of EPS growth moving forward, analysts are looking for an average annual growth rate of 38% over the next 3 years, which is remarkable. At the end of the year, 2024 EPS is expected to come in at $4.55 per share. That gives the company a forward PE multiple of 42.7 times, well below their 5-year average of 65 times. But as I've alluded to with other growth stocks, this is not a figure I put too much emphasis on. In terms of price to free cash flow, shares currently trade at 19.3 times. This is well below the company's 5-year average of 22.1 times. And then one of my favorite metrics is EV to EBITDA, where shares of Amazon currently trade at 21.7 times, well below their company's 5-year average of 26.2 times. This metric was at 17 times last month when I was adding even more heavily than I was today. However, even after the shares have climbed another 5% just in recent weeks, the EV to EBITDA, if you take out the crash from 2022, this is the cheapest you have been able to buy shares at this multiple in the last decade. This shows you that the company is generating a ton in terms of EBITDA, but it hasn't shown in the stock price yet. Since 2021, EBITDA has increased from $74.2 billion to nearly $100 billion over the trailing 12 months, nearly a 35% increase. Now there's one other metric I want to show you, which is the PEG ratio. This takes into account the PE multiple as well as the growth that's expected moving forward. Shares of Amazon right now currently trade with a PEG ratio of 1.1, which is very intriguing, showing that the growth that you're getting compared to the PE that you're paying is quite cheap. So we have now looked at shares of Amazon from a number of different valuation angles. And shares aren't entirely just super cheap, but they're not expensive by any means. And this is a company that I believe has a long runway of growth. Now, this isn't something that I think is just going to go straight up from here. We could go into a market turmoil and shares could come down, which is why I always deploy a dollar cost average approach. You always want to have cash on hand. Do your due diligence ahead of time because you never know when opportunities are going to show up. Down in the comment section below, let me know what are your thoughts on Amazon, and also let me know what is one top stock pick you have for the rest of 2024. Which company out there are you most bullish on for 2024 and beyond? And if you haven't done so yet, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.